story in over the past hour. Jobs, or rather the joblessness rate jumping to 29%, the worst, Devin Mulligan, that we've seen since the start of 2008. Putting a number to that, 6.7 million unemployed people in South Africa.
That's the official rate. So essentially what it means, Michelle, is Stats SA tells us that between April and June, close to 500,000 people have entered the job market, couldn't find jobs. They are now unemployed. And that's what brings us to the following number. It takes, as you said, Michelle, the official unemployment rate to 29%. You're quite right. We haven't seen these type of figures since 2008. Now, if you translate that percentage point into a number of people without work or actively seeking employment, it works out to 6.7 million people between the period of April and June. Let's add discouraged workers who, for some reason, have stopped seeking employment or stopped looking for work. When you do that, it's considered the expanded definition of unemployment. That number swells to 38.5%. When you look at the number of people, it translates to 10.2 million people out of work in this country, that's in a working age population that for some reason or the other are not seeking work because they are encouraged. But here's the bracket that's often considered, as we say, the ticking time bomb. And that's youth unemployment. If you consider just the bracket between 15 and 24 years old, we see that unemployment is hovering around 64%. These are considered the youth of the country. And what's another frightening figure attached to this particular graphic is that 3.3 million individuals in that bracket are without education, training or unemployment. And that's one of the reasons why it's regarded to be a ticking time bomb. What's the consequence, Michelle, of this? You will see an increase in protesting activity, some chaos on the ground that many investors and analysts warn about, and it's this particular bracket that we really need to see to. And unfortunately, in our conversation earlier, we said the president telling us this week that the skills coming out of university and out of the tertiary education are simply just not aligned to the demands of business. And as a consequence, you have many of the people that fall into this bracket, millions, not being absorbed into the economy. But there's an extension to this. We're going to now cross over to Heidi Jokos, who's at the JSE. Foreign investors are ditching South African assets at a fastest rate ever. They're selling off equity and bonds amid fears of another ratings downgrade for the country. As I said, Heidi Jokos is at the Johannesburg Stock Exchange. Let's just find out what it means to offload these bonds. Heidi, thanks indeed for talking to us. So $4.8 billion worth of bonds being offloaded by foreign investors. Explain to us the severity of this number.
Exactly, Devin. I've just been speaking to some analysts over the phone this morning to try and gauge how serious the situation actually is. And it appears as though foreign investors are dumping South African assets and equities. And this seems to be at the fastest pace ever since 1998. It's happened at a dramatic rate. And it appears as though the money that is being lost, or the assets, the value of those assets and equities being lost, is about $4.8 billion US, which equals to about 70 billion rand that our assets are being sold off. And this is basically the reason for this, is because foreign investors do not believe in South Africa's story. They don't believe that South Africa is an investable destination. And another contributing factor to all of this is the fact that rating agencies keep flagging South Africa. They keep raising red flags about how South Africa is operating, about how South Africa constantly gives bailouts to SOEs, how governance issues remain a major issue within these SOEs, and basically putting a major strain on the fiscus. Just recently we had Fitch downgrading us, or not downgrading us, but rather changing its outlook from stable to negative. Moody's is the only rating agency that hasn't downgraded South Africa to junk status. So the picture does not look good. And this, of course, has a ripple effect on how foreign investors are viewing South Africa's bonds and equities, because they're saying that things are not looking good. Rating agencies are pointing out that there's major risk in this country. So they are picking their hands up and saying, let's rather sell and not continue buying into this.
Now, Heidi, we put up these bonds in the international market for investors simply because we want to use this money to go ahead and fund things like infrastructure projects, for example. But as I understand it, there are consequences here when you have such an offload. Our borrowing costs as a country goes up, doesn't it?
Exactly. So major consequences here. It's not just a situation where you have foreign investors selling off and then you have the local investors picking up those equities and bonds that are up for sale. But of course, what happens is that the cost of borrowing goes up. South Africa's cost of borrowing is going to go up. And another thing is that the South African government is going to need to try to make bonds more attractive. And the only way to do that is to increase your yield. And just the picture doesn't look good for South Africa. The situation doesn't look good for South Africa. Our growth rates are really low. The Reserve Bank Governor Lesetja Kganyago actually revised that growth rate down just recently. You have rating agencies looking at South Africa and saying you are not doing anything about the debt in this country. You're constantly bailing out SOEs. It's not looking good. And now there are major consequences to this because everybody assumes that if foreign investors are selling off, surely there are other investors that will pick up those equities and bonds that are up for sale. But that's not always the case because there are ripple effects to all of this. And given the fact that our economy is just not doing well, things aren't growing, the economy is not growing as it should. You've just mentioned about our unemployment figures. So it's all just looking into the negative at the moment.
All right, thanks very much indeed. Heidi Jokos, they're telling us about the consequences of that bonds being offloaded by international investors.